Jack Mallers just made another bold prediction stating the global financial system is collapsing and Bitcoin is the escape hatch. If he's right, we're about to see a massive shift in wealth. Today, we're breaking down Jack Mallers' powerful Money Matters podcast episode where he dives deep into macroeconomics, the death of the dollar, and how Bitcoin could decouple from the stock market this year. We're pulling out the best parts of Jack's rant style insights and pausing to give commentary, challenge some of his claims, and essentially context. You don't want to miss this, so stay tuned.
Flapjacks is bullish as hell. I mean, let's not beat around the bush here. That's the reason why I'm calling on the Trump administration to add it to the strategic reserve list along with Bitcoin.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify and operate with integrity and transparency. I'm beginning to make this a kind of a theme going forward. I like listening to Jack kind of rant about the global markets, but his analogies and ways he breaks things down just makes things click for me. Like some of the stuff that I've been digesting over the years just clicks that much better when he explains it in some of these stories and frameworks. So I want to share that with you guys. So in this first clip, we're talking about the basically state of the Bitcoin market and where to from here and what the kind of thesis is.
So the last two episodes I've had over the last few weeks have been about the macro environment, the lack of liquidity in financial markets, falling asset prices, Bitcoin down 30% from its highs, and then shortly after that, the S&P 500 followed. This seems to be a particular strategy by the new Trump administration, and Treasury Secretary Scott Bessent and Lutnick has had certain comments. And we've had this conversation where I've said, I think in the shorter term, Bitcoin will be volatile and probably to the downside because of some of these macro decisions that folks like the Federal Reserve, the Treasury of the United States of America, the President of the United States of America, because of decisions they've made. And then last week I said, I think Bitcoin might be bottoming out. I do expect some positive words from the Federal Reserve. And I think the volatility to the downside will likely be ending. And I think Bitcoin might make new highs as soon as April and as late as June. So to continue that conversation, I think, guys, those of us that tune into the Money Matters podcast and Mailbag Mondays, I think we might have been right. Since I last talked to you guys, the Federal Reserve has come out and said it's ending QT. QT stands for quantitative tightening. Tightening meaning tightening monetary policy, strengthening the dollar. They came out and said, we are putting a stop to QT starting April 1st. That's a big, big, big deal. That's a sign from the Fed that they are easing monetary policy. Easing meaning they're making it easier to get money, easier to trade, easier to get a loan, easing access to capital. That, of course, is better for the economy. Why were they?
So that is, again, huge. I didn't really cover that in too much detail because they haven't actually started the QT. They haven't gone into quantitative easing, where they haven't started putting money back into the system yet, but they have signaled that they are moving that direction. So markets are always forward-looking, trying to predict what's going to happen. And after that, we basically saw Bitcoin start to create that floor that Jack was talking about. I showed you guys this chart before, showing you the volume over here on this side. So prior to this epic run-up, there was just not a lot of volume in between the 73 to 85 range. But as we move forward and take that run up out, you see that has gotten filled, not 73, but definitely 76, 80s has filled a lot more than we had before. And this was that announcement. This is a weekly chart. So if we change back to daily, you can see that here. I think the announcement, I forgot where it came. I think it was here, technically, about QT. But right now is this video. It's not quite April yet. I'm recording this on March 28th. You guys might see it beginning of April. And then that's also where these reciprocal tariffs will come back up. So April, the first week of April should give us a lot of information about what is priced in, what the market's going to be doing, and what to expect going forward. And speaking of expectations, Jack talks about in this next clip about the transparency of the Treasury Secretary and Commerce Secretary literally telling everybody exactly what they're doing, being public, out on the All In podcast. We've never had this level of transparency. You've seen clips of the media or meeting room or whatever it is within the White House, where Trump is allowing stuff to be public and put out there on social media. He does the most tweeting probably of any president. Hell, he has his own quote unquote short form Twitter platform on True Social. So he is all about putting stuff out there. Now, of course, you got to know with anyone in a public eye or a position of power, they're going to definitely give you just enough to have you look in one direction and still be making moves in other places. But having some level of transparency, whether you believe it or not, is better than none at all.
Saw 2 podcast appearances, one from the Treasury Secretary in Scott Bessent, other from the Commerce Secretary in Howard Lutnick. This is the focus of the show today, is I just want to go over what they're saying and, again, analyzing what exactly is going on in the world from a macroeconomic standpoint, monetary policy, global trade, and what it means for Bitcoin. So first of all, I highly recommend listening to the podcast. It's on the All In podcast. It's Scott Bessent, the Treasury Secretary of the United States, and Howard Lutnick, the Commerce Secretary of the United States. And they talk very openly about their plans for monetary policy, managing the balance sheet, revenue streams for the United States. You know, guys, I think the biggest takeaway, which confirms a lot of what we've been saying on the show, is that we're entering a new era in world trade, in the global alignment. I put out a tweet storm maybe a month or 6 weeks back, and it talked about how what we're living through today is the unwind from the world wars, okay? After the world wars, the world was absolutely decimated, right? We couldn't really conduct global trade with anybody, with Germany, with Japan, with China, because they were all bombed to death. Economies decimated, ability to produce raw goods and materials absolutely decimated. And so what did we decide as the United States of America? We struck these deals with these countries that effectively said, you guys produce stuff for us because you need to bootstrap yourself, get yourself back on your feet. We can't really trade with you because you don't have any money. You're crushed, you lost. So you produce stuff, get back on your feet. We'll be the customer. We'll be the buyer of the stuff. So you need a customer, you need to produce stuff for someone. We'll purchase your stuff. And so in return for the stuff that you're producing, we'll import the raw goods from you. We'll export the US dollar. We'll give you strength. So we're basically exporting the strength of our local economy, the strength of our industrial infrastructure in the United States of America. Okay, we have the strong economy. We're on the good side, the other side of the world wars. So we'll export you the dollar, the new world reserve currency, and we'll import real goods and services. And this was a tactic to just get the world back on its feet. Okay. And it did exactly that. Japan had some of the biggest growth that economies have seen in recent memory. China, totally reindustrialized, now produces all the stuff for the world. The German economy, incredibly strong. Germany is one of the wealthiest countries in the world, right? It worked. But inevitably, over a long enough time frame, you cannot export pieces of paper that you print out of thin air and import real goods and services, real stuff. You know, oftentimes people make the economy and macroeconomic ideas and policy way too complicated. Would you give someone real stuff for a piece of paper they print? The answer is probably not. So this is never a long-term sustainable plan. And over the last decade, it started to fall apart because China, for example, has decided not to be buying US treasuries and US debt anymore, not to be reinvesting their profits of trade into the US debt market, into the US economy anymore, not sustaining this. They're like, you know what? We're gonna invest in gold. We're not gonna take all of our excess profit.
And I've mentioned this before, and that is exactly why it's so beneficial if you have dollars to live in a foreign country, developing country. They don't use the word third world anymore, but any of the non-weird, that's Western, educated, industrialized, I forgot what the R&D stands for, but anything outside of US, Canada, Europe, Australia, like that, right? When you live in those other countries, they have a huge thriving middle class. And me and my dad talk about this all the time. It's just insane to see the price of goods at these cheap rates because they have so many people in the labor market, the middle class, like literally here in Cambodia and Thailand, Southeast Asia countries, the solution is just throw more bodies at the problem. It's like, you go into a little small convenience store and there is a single person on each aisle that is there just to front the shelves. Like their job is just to stand there 10 to 12 hours a day and make sure that the items that you grab or look at are put back in order. That's their full-time job because they just have so many bodies and the workforce, the ability to hire them, and they don't get paid that much, but your dollar goes so much further. And even looking at the inflation rate here, it has pretty much been sustainable the entire time I've been out here. I have not seen the exchange rate move more than a few pennies over 9 years. That is insane versus the inflation rate of the US dollar. If I go back 9 years ago of buying things in the US, those prices have changed astronomical. So him explaining it in this way about how that happened from World War II, and yeah, you giving away a piece of paper, which that's the dollar, that you can make out of thin air, you can print it. And in some cases now, they don't even print it. They just literally change numbers on a computer. And then you have that to give to someone else, and they give you physical items. That cannot last. Like, that's insane. You're like, wait a minute. Why am I exchanging this for that? So that unwind is what's creating this opportunity for all of us watching this now.
Listen to what they're saying. What are they actually saying? They're saying that the current economic system is not sustainable. If you listen to the podcast Scott Bessent was on, he said, the reason I am Treasury Secretary right now is because I saw what was happening over the last 4 years and realized our country was going to collapse. We're going to enter a sovereign debt crisis. We're going to go into a Great Depression. And I reached out to President Trump and asked if I could help. Guys, saying it on a podcast. What is that like? How am I interpreting this? The current financial system, the current relationships globally in trade is falling apart. It's breaking. The idea that other countries would give us real goods and services and we would give them fake printed pieces of paper doesn't work anymore. And we need a new system. We need new global trade. We need new financial alignment. That's what, like, literally the people that run our country are saying this on a podcast on YouTube. And it's what we've been talking about on this podcast, on my podcast, for months. I just found it so fascinating. And, you know, my main takeaway, for one, is we are entering a new era. Okay. I would say post World War II, definitely post 1971, we've been in this fiat currency era. The US exports the dollar and imports goods, services, and debt. Implied in being the world reserve currency issuer, we have to run in a deficit because we're ultimately giving other people the dollar and importing debt and stuff to consume. So everyone else operates in a surplus. We operate in a deficit. Okay. These guys are saying this system is falling apart. This system is dead. This system's not going to last. We're in trouble. We need a new system. We need to operate in a surplus. We need to focus on revenues. We need to focus on local production. That's a huge deal. Is that the world is slowly moving away from a strong reserve currency where you're exporting the strength of a local economy that survived a world war to more of a neutral reserve monetary system like gold, like Bitcoin, where the dollar is going to be debased and is going to be the escape valve for all this debt that the US has built up over 100 years.
Yeah, if you are holding dollars, especially if you're holding them in a savings account, you are going to be on the losing end of that trade. Now, again, if you're someone like me living abroad and you're getting those dollars, then you could still make out. But that's what I'm going to start doing more content on this channel, because I'm trying to figure out how I can get my dollars into Bitcoin for all of the jobs that I do in my business, because I'm still being paid online and that there's no way I'm going to be able to convert some of these clients into crypto. They are going to continue operating on the fiat system. But the goal is to get that, move it all into Bitcoin as the default kind of currency. Then from there, convert some of that to some other coins that I want to hold or invest in, and then use the Bitcoin as collateral to pay off credit cards or other bills or loans, or in the case of like buying my rent or paying for my rent or paying for food, things of that nature. Like, I still need to actually have fiat in these different locations. Like moving to Colombia, it's actually similar exchange rate as here in Cambodia. It's fascinating. 4,000 Colombian pesos to the dollar and about 4,100 Cambodian real to the dollar. So it's literally like an identical move for me. So that'll be kind of fun. But anyway, if I can manage to minimize the friction to get that done, then man, that takes that, like I told you, living out here, $1,500 a month to live in a really well off lifestyle, taking that $1,500 to be able to put it as $1,500 in Bitcoin and live off of that lifestyle, and that continue to appreciate over a 4-year term, man, that just increases the quality of life exponentially. So with that being said, we're going to play this last clip of Jack's prediction. He's not one to give big predictions, but I can see this one lining up. I believe what he stated is factual. Raoul Pal has said something similar. Even a half price of this is still super bullish from where we started. So I'm on board with it.
Going to be right. But I fundamentally believe that we have a much better chance of going to 250,000 than making lower than whatever the local low was, 78. I think Trump is getting what he wants out of the Fed. I think these guys are running out of time. By the way, the debt is too high. The debt is too high. You can't have rates this high when the debt is this high. Bessent's bill is going to be trillions of dollars. The debt is too high. We're trapped. The only way out is through currency debasement. Whose time and energy are you stealing? You're stealing those holding the dollar. How are you going to do that? Inflation and negative real rates. Sure. Keep your dollars in a savings account. We'll give you 2% interest and inflate it at 5%. We'll take 3% of the world's time and energy stored in dollars to cover our ass for all the debt we've accrued.
That is a simple way to explain it. Again, I just love his analogy, simplicity. So it's like, okay, we have this high debt. The rates are this high. And if we leave the rates at this price with this debt, we can't even finance the debt. We do not have the money to finance the debt. So how do we fix that? Well, we drop the rates and we have to steal this money from someone else. So you, the uninformed, keep your money in your savings account, in your checking account, where we will give you less than 2%. Like he said 2, that's being gracious. Less than 2%, but they will inflate or debase at 5%, 4.5%, whatever it is. So you put $100,000 in your savings account, and by the end of the year, the buying power of that is $95,000. Well, where did that other $5,000 go? Got robbed. So that multiplied by the population of working class people, that is one way, if not the only way, to get the bulk of this settled. In addition to the cuts and stuff that Elon's doing, but that's just a small drop in the bucket because the bulk of the spending is not in these discretionary locations that they're just stealing money from us. Yeah, there's maybe a couple $100 billion there, but we've got trillions. So anyway, that's all I got for this episode, man. I hope this was enlightening for you guys and hope you can find a way out of this fiat death spiral Ponzi. Hope that the way Jack explains this kind of clicks. I enjoy listening to these rants, like I said, and then breaking this down and sharing my insights along the way as well. I also believe that this 250K is definitely in the cards. There's just too many catalysts. And again, with Trump looking at this as a business opportunity and seeing the chips he's lining up with World Liberty Fi, his own token, now a stable coin, everything just all points in that direction. Like, I don't know what could actually, there have to be some insane black swan event that would disrupt this. Like, we would have to find out that Satoshi's still alive and owns more than just that 1 million wallet, and it's some nefarious figure that nobody likes or something. I have no, it'd have to be completely asinine to disrupt this, or somehow the Bitcoin blockchain is hacked or taken down. Like, that is the only thing that could stop this at this stage. All right, that's my opinion. That's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.